Now I'd like to introduce our the auditor who conducted our annual financial review, and Tim, you can do the introduction for that.
Yeah, last spring the board asked, I believe, Chris to go out and get RFPs from various auditing firms. I believe 5 firms submitted proposals. This was Evan, Marshall and Pease was the firm that Chris recommended to the board and the board approved. So this is their first year here. The audit this year is probably a little bit later than it normally would be, just because it was the first year and there's a lot of things for them to figure out as they go through the process for the first time. So the letters that you all received, I think today, the certified letters that came from Maria Pappas's office, that had to do with uploading the audit and some other information to their website, which was delayed because of the delay that we had in the audit, but that's been taken care of now. So all the information's been uploaded. I did that in the last week.
You're going to have a seat right here if you want to sit right up here.
So what I'd like to do is introduce Paul Thurman. He's one of the partners from Evan, Marshall and Pease, and he was the primary person on our audit. So Paul.
Hi, Paul.
I don't know if I need this or not, but if you can't hear me, let me know. As Tim said, my name is Paul Thurman. I am the senior partner with Evans, Marshall and Pease. As he said, this is our first year with Riverside Brookfield 208. However, our experience in the area of school districts is very vast. The one closest to you all is we are also the auditors for the Proviso Township School Treasurer's Office, as well as a number of other schools under his control as well. In total, we audit approximately 25 school districts located in Cook County, DuPage, McHenry, and Lake.
How many school districts?
About 25. Scared myself. Normally when we go to these meetings, there are very few questions. I'm very pleased to see that this board has taken the time, and especially the one individual who I don't know if he'd like to raise his hand, did this. Okay. At least I can tell from that it has been given the attention that I feel is due to an audit report for a district of this size. I have prepared what I hope are the responses to the concerns. I believe all of the board has received this matrix that you have. Is that correct?
Yes.
Yes.
Okay. The first comment I can't argue with, where he said that he suggested in the future, and the board needs to review a 64-page report that be provided as soon as available rather than just before the meeting. As Tim explained, one of the items that delayed the completion of the audit was the receipt of the appraisal of the capital assets of the district, which was done by American Appraisal Company. We had completed the large bulk of our audit procedures before that, but we needed that to complete the report. I'll try to do this in the order I can. The first one refers to note 1, small b1, which is on pages 18 and 19, and the question is to describe the GWFS, which is the government-wide financial statements, and well as the FFS, or the fund financial statements. The explanation is on pages 18 and 19 of the audit report. And additionally, the table of contents, which is in the front of this report, lists which statements are in fact the government-wide financial statements and which ones are the fund financial statements. The next question is, how does the district provide the information to make the accrual adjustments? The starting point for the audit report, for the audit itself, is the financial statements prepared by the Riverside Township School Treasurer. All of those are on a cash basis. The reporting that Riverside Brookfield embraces is the accrual basis of accounting. So the first order of business is to convert those cash basis numbers to the accrual numbers. The way that was done to start with was that we paid a visit to our predecessors, Matheson, Linsky, and Seller, and reviewed their working papers as well as the numbers which made up their report balance at June 30th, 2010. Using them, we were able to get the starting point for our audit. The question is asked, then, how do we get the information to make the accruals? Some of the data is provided by the district itself, primarily in the area of compensated absences, getting the other post-retirement employee benefit information from an actuary, and the fixed asset appraisals. The data necessary for the accrual that we need to do for real estate and personal property replacement taxes is available to the auditors, ourselves included, online from the county and the state. So we were able to actually go online referencing Riverside Brookfield District 208 with its RCDT number. I don't ask what that all stands for, I used to know. But it's through that I'm able to get certain information. Other revenues and expenditures relative to the various state and federal grants are available from the Illinois State Board of Education through their FRIZ system. So with all of the information that we were able to glean for ourselves and with the cooperation of the district, we were able to get what we need to make the accruals. The next question was, why isn't the budget prepared on the modified accrual basis of accounting? In reviewing the budget that was for the fiscal year under review, we noted that in fact it is on an accrual basis. It's right on the face of the budget itself.
That it says it is, or did you check in it? Does it just say that, or is it actually done
There is a
that
box actually on the front of the ISBE budget form that every district prepares. There are two boxes. One says cash, one says accrual. The box for accrual was the box that was checked for Riverside Brookfield.
I understand that. Let's assume, do we actually check and see whether we check the box? Or do we
I
actually check?
have to assume that whoever prepared that did so before submission.
That's
It's not something that I would audit per se.
Okay.
Take it on its face as it was that way.
I think that you're talking about the 2010 audit.
I'm talking about the 2011.
2011 budget, which was submitted in September, October of 2010. But I don't think that's correct. Budgets are not prepared on an accrual basis.
There are those that are. We have
I don't-
districts that do that. And I
Yeah.
kind of accepted the fact that the form that was submitted by the district showing was accrual basis was in fact what it did.
Yeah.
So I think we should check.
I don't believe that's
We've
correct.
asked many times if we do an accrual and we're told it's done with what we now know with the GWFS, but if you read on page 19, what's required to do fund FFS statements, it explains how you have to do revenues and liabilities on a modified accrual basis, and I don't think we do that.
Well, the revenues can be done on a modified accrual basis if the district so intends to do so. Like I said, I do have a number of districts that do accrual accounting for its budget as well as its financial statements that it prepares.
Well, I suggest we verify for the next year whether we actually do
Well,
it
I
on a
guess
modified
yeah.
accrual basis, Tim.
Well, your next audit now would be for the year ending coming up 6/30/12, and I guess the answer would lie in what does the ISBE budget form that was submitted for the 11-12 year show?
Cash basis.
Hmm?
Cash basis.
It does show
Okay.
cash basis.
All right.
When you're putting a budget together for like fiscal 12, we don't know at the end of the year what revenue is not going to be received. So if the state doesn't pay us money, that's obviously an accrual at the end of the year, but for budgeting purposes, we're assuming it's coming in the fiscal year.
Well, then, let me address that then. If in fact the budget is going to be on an accrual basis next year, then we will have to prepare two sets of financial statements. And this is not uncommon either. We have one district, rather large district, that applies for the Certificate of Excellence through the International Association of Business Officials, and they keep their budget on a cash basis, and they keep their books on a cash basis. Like we did here, we converted to the accrual basis with their assistance, but we prepare two sets of financials. One is on a cash basis, which compares the results of operations to the cash basis budget, and then the accrual basis financial statements, which are then compared not against the budget, but to the prior fiscal year. It says beside adjusting for timing as described in 1C, for instance, why are the agency funds included in the district budget? No, they are not included in the district budget as shown on the statement on page 20. The agency fund in this case for this district is the student activity fund, and it is not in the budget at all. It goes on to say that also under government-wide financial statements, property taxes are recognized in the year they are levied, but under fund financial statements, they are recognized if they are collected within 60 days of the year end, which normally doesn't happen. The 60-day rule was promulgated by the Governmental Accounting Standards Board for use in preparing modified accruals financial statements. As it applies to Cook County only of the districts we represent, your statement may or may not be true. Depending on when the tax levy, the bills go out, you may have taxes received by August 29th of the year. It just depends when that levy comes out. So to say that it rarely happens, it really depends on the county itself. In my other counties, is not an issue because their levies are done, their first installment is due in June, and the second installment is due in September. So it's pretty easy to know when the money is coming, and therefore the use of the 60-day rule always applies. Within Cook County, our accrual basis districts such as yourself, you are correct, it does vary. Okay, the next one says that the figures don't match, and that's between the non-current liabilities in Table 1 of the MD&A and the non-current liabilities on page 9, which is the statement of net assets. There is a difference of $946,201. Those items are the unamortized premium that the district has paid on bonds that it has sold in the past, and the district's net pension obligation. The Table 1, which is required for the MD&A, just combine those figures together. It's not that they're omitted, it's just a matter of the presentation. The next one refers to the on-behalf payments. The on-behalf payments from the state to the TRS are required items in the fund financial statements. The reporting of this item and expense has no effect on the bottom line. It is the on-behalf payments are shown as a revenue under state sources and are shown as an expenditure of a like amount. So it really has no effect.
Is it an item we budget for?
Huh? No, it was not in our budget this last year.
Is it supposed to be in our budget?
It should be.
Because it's a, I mean, that's why it's a $2.6 million item, and it's the first time I ever saw it mentioned.
Well, that may be. I looked at the management letter or predecessor, and you are correct, it was not mentioned. But there is a line in the ISB budget form for its budgeting, and both on income and expense. And in point of fact, the TRS letter, which each district gets, which provides information on the current year's funding of the TRS, also gives you the rate that will be used for the next year. So that rate can be used by a district for its budgeting purpose. Basically, it's taking your certificated payroll and multiplying that by the percentage that the TRS gives you, and that's your number.
Is both an income and an expense number the same?
Yes.
They are. It's an off, yeah. It has no effect to the fund balance of normally the ed fund. So it really, it's something that's required reporting, but it really, as a practical matter, is there because it's included in the report, and the state says we got to do it. If I'm going too fast or you got questions, please jump in. I don't want to shortcut this. The next one refers to the presentation of the liabilities as accounts payable. There's a difference there of $70,355, and specifically bear with me a second.
On page 13.
Right. It refers to the
Long-term
numbers on page
liabilities.
13. And the difference in this instance, and it is correctly noted, the compensated absences payable, which is shown in the statement of assets as an account payable, should not have been included in this Exhibit C as a long-term liability. It is not. The compensated absences are payable year to year, and it really should have been, it's a necessary part of this reconciliation. However, it should have been shown in a separate category, other liabilities.
Paul,
Yes.
to be respectful of the board and the board's time, you did say you made a few corrections based on some of the questions you received, that there were a few minor corrections that needed to be. Do you want
I can
to
skip
highlight
that.
those first, and then if the
I'd be
board
happy
has
to.
additional?
Sure. You bet.
And then I'd like to close with something.
The first one that we found is relative to page 33, note number 6, relative to the IMRF funding status and funding progress, the unfunded accrued actuarial liability. There is a discrepancy. The $587,893 is the correct figure, and that is what should have been shown on page 38. Both the figure that was, it's a typo, and how I racked my brain trying to figure out where it came from. But it is incorrect, as is the percentage as well. The percentage should be 31.71%, not the number that's shown. And what I'd like to do, and I've talked to Mr. McGinnis already, on these couple of typographical errors, with your permission, I would like to recover as many of the audit reports as I could, and I'd like to make those corrections and reissue it with the proper numbers being shown.
Okay.
Let me say that the changes that are being made have no effect on forms that have been filed, specifically the annual financial report with ISB. It has no effect on the federal financial audit program that was done. It has no effect on the fund balances at all. It is solely typographical errors that were made. The next one I found was in note 12 on the funding status and funding progress. One number is shown as 3.94%, the other is shown as 3.64%. The 3.64% is correct.
Any other errors?
No. I believe those are the only errors I
Hold on a second.
What I'm going to ask you to do, if those other items that we have on our, will not go over tonight, if you can be able to write in and give us a synopsis of each of these, that would help out.
I can do that absolutely and send it to Tim, and he can.
And if we have any questions from that, then we'll send it back
I have
to
a
you.
question right now. It was a considerable amount of effort to go through this, and when you
Yes.
find errors, you question what else is wrong. We said we filed on a modified accrual base, and as far as we know, we didn't do that last year. Seems like it's something an auditor should be able to figure out.
Well, again, it
Well,
was.
you already said-
Our predecessor did in fact file, prepare the audit report on a modified accrual basis. That I can tell you to a certainty. The fact that the budget states that it's done on an accrual basis, I have no reason to question that.
Okay. Except for when you have to check to see if we made adjustments properly for the accruals, right?
To understand something, from the standpoint of the accruals, first of all, we run them past the Director of Finance, or Business Manager in this case, as the title is. He is aware of how we make them and what is involved. A number of them he is helpful in getting for us, so there is knowledge there. As to are they correct? Those adjustments that are made to convert it to an accrual basis are not given to the Township School Treasurer. He does not care about accrual basis. He is strictly
I understand.
cash basis.
I'm saying from an auditing perspective. I want to ask about two other specific. You said, what
Okay.
about on page 22 on note 1, the expenditure of fund balance that says it's as of June 30th of 2010?
Okay, I knew there was one word.
What page are we on? 22.
And that one does in fact.
So where is it on this sheet, Tim? Where's it on this sheet?
I don't know, he didn't follow that sheet.
Just a minute, I'm sorry.
Now,
It is,
I'm just stopping
It
you.
shows, he asked the question that shouldn't the page 9 reference match note 15? Note 15
No, I'm asking, just on note 1, on page 22, there's a schedule that says balance sheet restated GASB 54 categories. And it says government funds as
Yes,
a...
the date is wrong. It should be June 30th.
It's not just the date that's wrong, though. The actual table is not from this year, is it?
No, it's from last year, converting to what? GASB 54 is a new pronouncement that was promulgated by the Governmental Accounting Standards Board, and this is the first year it took effect. One of the requirements of GASB 54 is that we report the changes that are made from the prior presentation under the old format to what it would be under GASB 54. The date on that note is incorrect as June 30th 11, it is June 30th of 10.
You have June 30th of 10.
It should be 11.
Yeah,
It should
no,
be
it should
11.
be 10.
You have
So that,
10.
it says 10.
It is 10.
It says 10 on there.
On page 22, if you,
I'm sorry, that's not the one I was thinking of, I apologize.
That's okay.
That is June 30, 10. The one I was referring to, I apologize. Well, no, note 15 is what you're referring to, am I right, correct?
What page are we on?
This is on page 37.
And you didn't follow the thing, so I don't know which one. Yeah, but this is too.
No, you gotta restate that. That's
Okay,
part of the
but these
announcement.
numbers don't match.
That's
Okay.
last year's
All right.
activity.
So on page 37, is it June 30th, 2011 or 2010?
It
No,
should be
15,
June, the
30th,
net assets
10.
restated, as restated, should say June 30th, 2010. That is a restatement of the opening balances.
Okay.
Okay.
And that, I believe, answered the question that he had there as to why there was the difference, why he said that shouldn't page 9 reference match note 15. The answer would have been no, but because the date was incorrect, I can see where a reader would have been misled.
Any other questions?
I can prepare, at your request, a complete answer to, I have some of this already done. So I'll
Well, I
finish the
have an
rest
issue, I have an issue that I need to talk to you about. You say that you've worked for 25 school districts.
Yes, sir.
And Proviso Township Schools. In the interview process, I know that the Finance Committee asked you, would you have any issues meeting the dates, known dates that we need to hit? And your comment in that interview was there'd be no problem at all.
That is correct, sir.
Okay, my problem is that we went beyond and had asked for extension for the reports. And then you said, well, we had to delay it to wait for an appraisal and everything else like that. If you are experienced with schools, why couldn't we get the reports on a timely basis?
The reason simply is the appraisal process. You, for whatever it's worth to you, and sadly to say that these appraisal companies take their own sweet time, and you are not the only district in our cadre of clientele that had the same experience with not only American Appraisal, but with other companies as well. It's something we have no control over.
But if we knew that beforehand, wouldn't we submitted the appraisal sooner to make sure we did our dates?
I believe the appraisal was, the request for the appraisal was submitted in a timely manner. The fact that it did not come out in a timely manner, I know Mr. McGinnis made a number of calls to them trying to find out where it is. It's just, unfortunately, it's the nature of the beast. As I mentioned to Tim tonight, number one, we will be starting the audit much earlier next year, and hopefully we won't run into this problem. I don't know that unless there's some major fixed asset additions going on in this upcoming fiscal year, I think we can get around having another appraisal. We'll use that appraisal as a starting point and update it ourselves. You don't need to have an appraisal every year, but that unfortunately was really the reason for the delay in the audit.
Is that whole appraisal done every year? Or,
It does not need to be. I do have some districts that do it every year. Others, we have helped those districts institute their own fixed asset accounting program, and they can maintain it themselves.
and was it, do you recall if the prior audit report suggested we do something like that in the fixed audit area, in the fixed asset area?
I
And-
cannot recall at this moment in time, but I will tell you this, that, and I know it was one of the questions that was raised in this matrix, and that represented, the question was relative to the change in fixed assets that was made. We were able to obtain our predecessor's fixed asset accounting records. In my close to 50 years' experience in auditing school districts, fixed assets is the worst problem I've ever encountered. Primarily, you end up with a big boxcar number because nobody really keeps track of the dispositions. And obviously, if a building is disposed of, that's relatively quick to see. It's the equipment that gets disposed of from time to time, and nobody bothers to take it off of the accounting record. The appraisal, I think, was a good idea. There were many fixed assets that were listed on the predecessor's schedule that just don't exist anymore. Primarily in the area of old computers and other things of that nature that just were no longer found in the appraisal process. And I will say this, as late as American Appraisal was with this, of all the appraisal companies that I've had occasion to work with, I feel they are one of the better ones. So I think you got a good appraisal, and the data that you have, I believe, is reliable.
Did they also do the tagging of the assets?
They do, sir.
So that was part of the process, if I recall, that we didn't have a handle on all of our equipment. And so
That's-
we went through a process of hiring somebody to identify all our equipment, tag all our equipment, and bring our fixed assets, at least as far as equipment is, up to date.
Well, they did it in terms, I know that there was consultation with Mr. McGinnis as to the history of the structures of the districts, the various additions, and using the appraisers using a timeline based on that information, we're able to put an appraisal together of the various properties, property and the additions there too. They were able to identify the, what I refer to as land improvements that were done, the stadium, things of that nature. It was a very detailed fixed asset program.
And then this is the process you're describing that you had to wait for?
Yes, sir.
Okay, so going into next year, the project won't be as extensive?
I don't believe they'll have to do it again at this point in time unless something major occurs. Normally, for our clients that like to do these, we kind of feel comfortable doing it every 3 years. Because unless, like I say, there's some really major additions, we can kind of track that ourselves and depreciate them ourselves, alleviating the need to wait for the appraisal to come through. We can compute our own.
You know, because we have certain governmental timelines that we have to meet, which puts the ball back to you that we need work product from you and from them to get whatever we have to do published on governmental websites to meet the statutes that they demand on us.
Well, for instance, we did get an extension on the filing of the annual financial report. That I can tell you was filed on time. That was December 15th. We met that. We were still waiting for some of the fixed asset information, but we could file the AFR and get that off the table. The item that Tim referred to from our former Maria Pappas's office is something that started a couple of years ago,
Right.
where for some reason she wants to have the audit reports uploaded to her website. And it's a very simple process. We take the audit report, put it in a PDF format, send it off to the district, and they can upload it to that, and he's already taken care of that. So as far as I'm aware right now, whatever guide or deadlines, other than for you nice gentlemen, they have been met. And I can assure you, you won't have this problem next year. A, because of the appraisal not being necessary. For instance, another area that causes us as auditors a problem sometimes is the actuarial calculation of the other post-retirement employee benefits. Tim's predecessor had already put the wheels in motion for that, and we had that, I believe, if memory serves me correctly, before the audit even started. So from that aspect, that item was not an item of consideration, where in other districts we're waiting for it. Frankly, I have one right now that we gave them put the request in, I believe, in September for an OPEB calculation. It is a very large district in terms of number of people. We still haven't got the number. The business manager there keeps calling virtually daily, and it is the only item that's missing from a report. They were very anxious to get done because they happen to want to file again for the Certificate of Excellence in reporting to IASMO. So delay can come from a couple of sources. In our case here, it was the appraisal company.
I have one other question.
Sure.
You said things didn't, again, I'm only focusing on what I can remember, seem to vary. The Schedule 3 at the end shows the budget versus actual,
What page?
all kinds of them,
Okay.
okay? The
You're
page that
referring to the,
I'll talk to
fund
is on
financial
page
statements?
43.
Huh?
43.
Budget and actual for the
Yes, sir,
educational
yes.
account.
Yes.
The numbers don't match the budget that we were given.
I can tell you, and I don't have it with
I
me.
mean, I just said some of them, and they don't match.
I can tell you that the items of budget, that we looked at the budgets when I saw your note again. The numbers that are shown in the budget column of each of the respective statements came directly from the form filed with ISB that we were provided.
Last year's form.
Yes, for fiscal 11,
This is
10,
the
11
report that we
year.
approved in the budget this year that has fiscal, it has actual for 2010, budget for 2011, et cetera. The numbers in here don't match the numbers in this report in about half. I only checked about 20 of them, and about 5 of them didn't match.
The state farm is different, right?
So the statement, the numbers should be the same. The numbers in that budget, you know, for fiscal 12 are the same.
If
as
it'll
reports.
be of any help, and I believe Tim has it as well, I believe we can provide you with a copy of the budget that was used.
I this thing is frustrating that we have to do this.
That's what
I mean,
my point is.
Either the state law is messed up or there's a mistake, because, I mean, there should be, you know, the way this amateurs read this thing is like, we just like to get the big picture, and like the numbers have to add up. They don't add up, then what's going on, you know?
It's not they don't add up, I think what.
Well, they don't add up if they don't match up in our minds. They don't add up. You know, it's frustrating.
I appreciate your comment, and frankly, the amount of time that was spent in preparing this matrix obviously had to be a great deal. And I can tell you that in just reviewing and trying to prepare my answers, keep in mind I got this yesterday. I've got about 6 hours myself just trying to put the answers together. So I do appreciate the time that was spent.
I'm not blaming you.
No.
Well, I'm blaming sort of the system here. If, you know, the ISAB or whatever makes a different set of numbers than what we have in our actually budget that we have. I mean, that's...
Do you have a working budget versus the one you file?
The budget numbers you have there are very detailed. The budget that goes to the state board is not nearly as detailed. It summarizes a lot of those numbers. The totals should be the same, like for each fund and that type of thing. But it's.
So the total fund-
state-
Well, I'll just give you one example where they don't equal. You did not have in the budget the on behalf of payments. It's $2.7 million. It jumps out like a thumb. I looked at the total we had on revenues and education fund in here, and I looked in here, and it's off by almost $3 million.
Yes, it is,
Is
sir.
that the current year budget, or is that last year?
The current year budget. But the
He is
current year
correct
budget
there.
provides, supposedly provided, I mean, how could 2010 and 11, how could they change? Some of the numbers on 2010 are different in here than they are in here. And
I
it's just.
would need to double check, but I
You know,
believe-
again, you look at one number, okay? You look at one number, you take the time to look at one number, okay, we got a budget report, and the total on the revenue for the education is off by $3 million. And then you wonder, well, what else do we have to look at?
I will, for what it's worth, and I understand your frustration. About 50% of my districts don't budget for on behalf. And in point of fact, you all are very fortunate. One of the things we need to disclose, if it happens, is if the expenditures in any particular fund exceed the budget. And on those districts that do not budget for on behalf, I can 99 times out of 100 guarantee that comment is going to show up. In your case, it did not. It could have, I guess that's just, but you're absolutely right. You look at the audit report and you see the revenues there, and you look at your budget, and you're absolutely right.
All right, so Mr. Thurman, let's do this. You owe us then responses back to this matrix.
Absolutely.
You also then, where there are mistakes you will then change the audit report and bring it
If I
back to
can
me.
get your old ones back, I
And
would
Tim, if you
appreciate it
can
only.
confirm, just looking at numbers, just and see any discrepancies. Also follow up on the matrix, just make sure that changes, errors have been made. And then you
Oh,
need to make sure about
absolutely.
that.
Absolutely.
Paul, moving forward, being new to the district, and Tim being new to the district, and this being your first audit, we operate on a cycle where we have a committee of a whole for our general board meeting. This is our committee of the whole for January. So that, next year, so you plan your calendar accordingly, we should bring this audit to the committee of the whole at the end of October or November, so that we have plenty of time to discuss it, you have plenty of time to answer
Yes.
this question.
Yes.
And then we can finalize it before we send it off to the state, instead of doing this in retro.
Well, normally.
Hold on a second. Doesn't the normal time due, according to what you sent us, it's due to the state by October 31st, right?
I think it's 15.
Actually.
October 15th. So
15th.
why can't we try to plan in advance to actually get it done and submit it to the state on time without asking for an extension?
We absolutely
That-
can, but it is very common for districts to
Well,
ask for an extension.
Again, but that's fine if we have to extend for some reason, but can't we try to, put the schedule together, if it's due on October 15, to actually have it done
Right.
and submit it by that date?
So let's do this then, okay?
I can tell you the
Excuse me,
ruling every
Mr.
other-
Thurman, let's do this. By the end of September, we would like to have the audit report completed.
Yes.
That's our target date so that we can review it at the committee of the whole meeting in the end of September, and then be able to present it in October 15th. If there are any
so you-
issues why we can't make our October 15th date, we need to have at least 30 to 45-day notice why we can't do that, and be able to give us a strict reason why, that will be addressed at the end of September committee of the whole meeting.
I can tell you you'll have it, because, let me tell you right now, like I explained to Tim, the audit will commence substantially earlier, and I'm gonna tell you that I can pretty much tell you approximately when. About the third week of July, we will commence the audit of the Proviso Township School Treasurer's Office, and once I complete that audit, which a lot of information that I use in the audit here will be done, and I can commence the audit, the actual audit on site here. So unless something just, the wheels fall off of something that I can't see right now, I see no reason that by September 30th, a draft audit report is in your hands for review.
All right, so just remember you're on record because on TV. Any other questions?
I have a question. This,
What page?
page 37 again, this appraisal report, when was that completed then?
You gotta talk to them, we do.
Tim, do you have the date handy? I don't. It's in my work papers back at the office.
It was sometime in the fall. I don't know the exact date. I mean, I can get,
I don't recall us getting a report. Were we supposed to get a report or? on that?
I can give you a copy. I mean, it's like that thick, that it's an appraisal of every asset in the district.
I'd appreciate maybe next time just going over that, because we have a little summary here. I'd like to understand why, what, if there's stuff missing, why it was missing.
No, nothing was, yeah, don't get carried away on that one. The appraisal that was done by American Appraisal, as Mike pointed out, they come in here and they tag everything. It's like the old Army thing. If it ain't moving, paint it. They tag everything. They are very, I have found them in the past with other clientele to be very good in that aspect. The question is, what happens after that? For instance, there's a lot of small equipment, computers and things of that nature. When they are disposed of, somebody needs to know that. If it be Mr. McGinnis, so he can tell me about it and we take it off the fixed assets, so be it. Otherwise, you have to wait till the next appraisal comes out in a couple of years and then maybe things disappear. That was the big thing. We just didn't take that appraisal and run willy-nilly with it. Because we had obtained the fixed asset records from our predecessor, we went through to see where these major changes were. It was big.
$2 million.
Right, so I want to
That was
know where the number comes from. Why is it off $2 million?
Well, a big part of that's the construction from wouldn't it be if you're looking at the prior appraisal, which was done a few years ago with the appraisal this year, this one has the construction in it, which I'm sure is probably the reason that an appraisal was done. And the major reason was because we had all the construction here.
Well, why would that reduce net assets by $2 million construction?
Because, well, it didn't.
Yeah, that doesn't seem right.
I was had a problem with
Your
paper.
explanation does, if we get rid of computers
was
and
on the
stuff,
books.
and nobody recorded
It
it.
wasn't recorded as being
But
gone.
we did.
Yeah.
Yeah.
Can we have
Or it's gone, or
is
is
it,
it on the books?
do you have a list of the $2 million listing of items that were just off?
Tim, that must have been in the report.
2
In
million.
detail,
Yeah.
I could do it, but it'd be really, really time consuming.
So your number's a gross number.
My
net
number,
assets.
how can I explain it to you? My number is based upon the breakdown between, the appraisal company did between land, buildings, land improvements, and equipment.
Okay. And out of that 2 million, the majority you're saying is the equipment?
Old equipment, yes, absolutely.
Can we have that, do you have that analysis that made up your 2 million by those broad classifications?
I have the, I'd be willing to share it with you.
Yes,
I
you
have the, our predecessor's fixed asset accounting records. And I'd be happy to share that with you along with a copy of the appraisals, and you can see for yourself what has happened.
Did the appraisal show what was reduced?
No,
The appraisal's only going to show you what's
appraisal's
there.
what's
What you
there.
have on
But I
here.
mean,
We
that's what I
we
meant.
have to get those
It shows
records
the
from prior
items that
audit.
were no longer there.
No,
Oh,
the issue is,
They just did an
we never
appraisal.
had a detailed listing of all the equipment we had in here to go line by line and say we're missing computer X.
In
That's
our
the
previous
issue.
appraisal, we never had that.
We never
I
had
got
that.
you.
So that's.
Which also could lead to a lot of cleanup too, right?
And that's why we had asked for this appraisal, to get a starting point, to get our records starting to be scrubbed clean. It was the reason why we had asked for this.
Post-construction.
Right. So if you can just send us that broad generalization that you
Yes.
have between the major areas, the adjustments, we appreciate it. And then, Tim, could you just do a little summarization on that appraisal that we've gotten? Maybe we haven't
They
seen it.
do
and then-
provide a summary, like Tim said, it's about yay thick. It's item by item.
So show us where the decreases came from, general areas.
That, I can help Tim.
That he'll do
I will
that.
provide it.
He'll have that.
I don't have the record.
He's
of
getting-
what it
Give it
was.
to you.
Because Matt, he would have it from the previous record, said equipment was X dollars, he now from the appraisal has it as Y dollars, and we can at least see the
Well, I
broad
think-
classification.
And that's the
I
reason
know
why you
was
did the
not aware of
appraisal
a
this
prior
time, was
Yes,
to say
to
it's
scrub
too
them clean,
general.
to start
It's
and
too
scrub
general,
them
yeah,
clean.
okay.
I mean, if I could, what I would provide you with is the fixed asset records that Matheson Moisty and Seller provided to us that they used in the preparation of the June 30th, 2010 report. And I can show you, or make up a worksheet that shows, here's what the old auditors had by category as best I can. Here's what the appraisal showed in these categories, and here's the variation. While we lost X number of dollars of cost, we also lost a goodly sum of depreciation, accumulated depreciation, so the net number was not that big.
Okay. Thank you very much, Mr. Thurman.
Thank you.
And we need to have all that information back to Tim. I'd like to have it prior to our next board meeting,
When is that?
2 weeks?
2 weeks.
And you want this
That we can do.
handed back?
Yeah, hand it back to him.
I'd like to keep mine until I.
Give it to Tim, and he'll collect them all, and I'll get started on the redo of those first thing tomorrow.
Compare to.
You can get the rest of them together, and I will have that within 2 weeks. You'll have
But he would.
okay and answer to the matrix. You'll have the new reports,
Thank you.
everything.